Welcome to the webinar, How AI is Transforming the Finance Function, hosted by Rillet. Like I said, I've been looking forward to this webinar all week, so really glad that everyone here could join. My name is Alex. I lead Rillet's community efforts, and I'm here to introduce you to our panelists, Bill Koefoed, Chris Quintero, and our moderator, Nicholas Cobb. Bill is the CFO of recently listed financial management platform OneStream. Before that, Bill led investor relations at Microsoft with Steve Ballmer and was the CFO of Microsoft's Skype division. Chris is a leading research analyst at Morgan Stanley's equity research team, focused on the office of the CFO. Recently, Chris released an impactful paper on the changing landscape around ERPs. Before Morgan Stanley, Chris was an associate at PIMCO. And Nick is the CEO and co-founder of AI-native ERP Rillet. Before founding Rillet, Nick helped build retail bank N26 from the ground up to $9 billion valuation. Gentlemen, thanks for joining. Before we dive in, I wanted to hand it over to Chris for some brief considerations. Chris, go ahead.
Yeah, thanks, Alex. So for quick disclosure statement here, for important disclosures, please see the Morgan Stanley research disclosure website at www.morganstanley.com/research disclosures. And with that, turn it back.
Cool. Exciting. Yeah, no, really excited for this webinar. So we have two really experienced folks here on sort of the office of the CFO. First, and Alex had mentioned that in her intro, but for attendees, I thought it would be fun to share. So Bill and Chris actually worked together as OneStream was listing. So Chris and Bill have some history there, and love to maybe pick your brains, both of you, how that working relationship went and started. Could be interesting for folks to hear. But yeah, first I wanted to start with you, Bill. When we first met, I was really impressed by your journey, obviously overall in your career, but most recently you took OneStream from 30 million ARR all the way up to now $500 million, which is like a journey that most folks here on this webinar would love to live through and kind of aspire to, frankly. So would love to just ask you an open-ended question. Tell us about that journey and share a little bit of your experience.
Yeah, I mean, I'd say that, the first, first of all, thank you for including me, and to your point, Chris and I did participate on the IPO. Just for a little bit of background before I go all the way back. We selected Morgan Stanley as our lead left banker in the fall of 2021. For those of you who recall, the fall of 21 was kind of the go-go days of IPOs, and we were lucky and excited to choose Morgan Stanley as our lead left bank. Not long after that, we started doing mock earnings calls, and Chris was nice enough to help us with those mock earnings calls. And so what I would say for everybody is, practicing and doing those and getting ready. I'm a big fan of practicing with your pads on. And Chris was, a big advocate of help, or a big help in our process there. So when we did go public, I think we're more ready than we would have been otherwise. Just back to answer your question, I'd say, for those of you focus on big markets. This is as you all know, the finance TAM is a big one across both ERP and obviously CPM, which is where we play, as well as other point solutions along the way for finance. And we when I was recruited, I was in Seattle, and I got a phone call on would you like to move to Detroit? And my guess is a lot of CFOs said no, and I was lucky enough to say yes. And partially it's because it was a big replacement market with Hyperion and business objects, and I kind of knew right out of the gate that this was going to be a big market opportunity. And then I just say, build your, when we're doing our pre-talk, build your infrastructure, build your team, and put one foot in front of the other, and just keep executing. And I remember the day we hit 100 million in ARR, which was about I think maybe 3 or 4 years ago, and obviously we're really fortunate to be. We reported 540 in the in the September quarter. So it's been a fantastic ride, and couldn't be happier to be here.
Yeah. Was that actually when you joined? You obviously kind of, again, maybe took a risk and followed your gut a little bit. When did it become clear that you really took the right decision? Like, were there signals sort of as you were, obviously numbers being one of them, but like what other signals were there where you kind of like, this is the right opportunity and I'm happy to go all in on this?
Yeah, I was I've been at some other companies along my kind of CFO journey that I joined, that like a couple of days later I'm like, oh crap, what did I do? And those are, you kind of stick it out, and you try to fix it. Obviously, this one honestly was, I knew the second day that I was here that this was going to be the right answer. I have, we're based here in Detroit, in a suburb of Detroit. It's just a fantastic team. It's just, in addition to obviously the great opportunity, it's like, are you working with people that you want to work with every day? And that matters a lot, because you could have a great opportunity, but you could have some crazy team that you're working with, and that's not super fun. But of course, our CEO told me it didn't really start snowing in Michigan until, after the holidays. And literally the first day I got here, it snowed 2 feet in November of 2019. I questioned his weather judgment a little bit, but it's nice to be in Michigan, candidly, because I can hire people. They can live within a half an hour of our office. It's a nice place to attract talent, because I can get good accounting and finance people out of the auto industry, which is quite a good, capable industry. And it's been a really great place to grow a company.
That is awesome. That is awesome. Cool. And then for maybe the audience's context, then what year actually did you meet Chris in 21? Was that sort of later parts of your journey, or when did you
I
guys?
think Chris was at 21 or maybe 22.
Yep. Okay.
Yeah, 22.
Yeah.
Cool. Awesome. Cool. Yeah, no, great. So I wanted to start with maybe one sort of macro question first before we take it down a little bit into more of the details. Chris, you've wrote a seminal paper. I think it'll be people talk about it a lot. Let's put it this way. You're probably too humble to admit that it was quite impactful, about the ERP supercycle. So I'd love to hear a little bit from you, for the audience here, sort of in a summary, what inspired the paper, and then what are some of the key takeaways for folks?
Yeah, absolutely. Well, first, Nick, I really appreciate you having me on. It's a great event to be a part of, and obviously working with Bill again is always such a pleasure. So thanks for having me, and for showcasing our research here. So yeah, you're right. The ERP supercycle, as I've coined it, was really something we started to write about and hear about, really kind of towards the beginning of this year. And as a part of our ongoing research process, we speak to people on the ground, so consultants, implementation partners, resellers, and that really helps us get a better sense of what's going on in the ground and some of the early trends. And it was really there when we start to hear about those early inklings of like an ERP cloud migration story starting to happen. And we first kind of started to see the first proof points come out of some of the really large vendors. So like SAP, they had some really strong first 2 quarters to start the year. They saw their ERP cloud suite actually accelerate. And so those early proof points really made it real for us. And so we really wanted to dive a bit deeper and really test this early thesis that we had around ERP cloud migrations accelerating. And we really formalized our view with this report that you're highlighting here. It was about a 100-page deep dive piece that we published in September, and it's definitely garnered a lot of attention. Nick and Bill, I know you both have found the report quite interesting, and the overall feedback has been really great. But when I think about the key findings and takeaways from that report, it was really three main things. It was, number one, the ERP market is actually bigger than what people think. We see it as a $220 billion market growing at about a 17% CAGR. So really large and really nice growth rate. And then number two, ERP migrations to the cloud are actually accelerating. And as part of that report, we commissioned a survey, which actually found that about 50% of CIOs expect to upgrade their ERP system within the next 2 years. And then number 3 was there's actually multiple catalysts that are driving these upgrades. Some of those include end-of-life deadlines from some of these larger legacy vendors that are forcing people to move to the cloud. And then actually, more surprisingly, AI was actually a pretty big catalyst as well. And having the right tooling and architecture to be able to ready to adopt some of those tools down the line. And so just some quick context, there have been some head fakes in the past as it relates to migrating to the cloud within this market. But for multiple reasons, and I think Bill would agree here too, we think this time is real, and we're seeing some real momentum within the broader kind of office of the CFO space. And so when you think about ERP market, office of the CFO, it's actually 60% still on premise. And so you've really got this, and that's the highest among all application markets. And so you've got this really big backlog of companies and organizations that we think are going to be upgrading to the cloud in the coming years. And so that ultimately makes us think that this is going to be that really kind of first major ERP upgrade cycle since Y2K, and hence why I've coined it as the ERP super cycle. So we're really excited about it and think it's going to be a pretty interesting and durable trend in software over the coming years.
That's awesome. Cool. Yeah. And there was actually one question also in the audience, and you kind of addressed it a little bit, but maybe for the uninitiated in terms of like, how do you define, it's obviously a title or a term, but like the difference between a super cycle or cycle, and when you refer to cycles in general, what does Morgan Stanley, what does Chris Quintero mean?
Yeah. So super cycle, the way we define it as really kind of a industry-wide transformation or change that's happening here. Obviously, since the 2000s, there have been companies that have, throughout that time upgraded their ERPs, and you've seen some of those cycles happen, around kind of big technology trends, right? Like the first kind of move to the cloud in 2008 and 2010, that kind of area, you start to see some upgrades there. But when you take the whole market in totality, like I said earlier, 60% is still on premise, and you've got multiple drivers and catalysts now, a couple that I've already mentioned that are, I think, driving these and making it really real today. And then given that, the kind of time frame that people have, right? So SAP, their end of life deadline for their on-premise ECC version is in 2027. And so it's really forcing and making people upgrade at a large scale to the cloud. And so I think that's really kind of what's making this more of a super cycle today than versus maybe the smaller cycles we've seen over the past 20 years.
Awesome. Thank you for that explanation. And also for everybody else, if you guys have questions, feel free to drop them in along the way in the chat. We'll try and get to them. And there was some folks joking about QB Desktop as well. Yes. I'm not a research analyst, but I once checked. I think it's a $700 million line item actually in their revenue still at QB Desktop. So if we're into it, again, please check my facts. I'm not a research analyst, but it was surprisingly large. Maybe dovetailing of that for you, Bill. I know you're obviously on the ground with customers and like what you see at OneStream. So maybe share a little bit of your experience there. But then also you have a paper, I think, that you were working on with your team, the finance 2035 outlook. So I'd love to touch on both of these operationally, but also at that sort of research level that you guys have done.
I'd echo what Chris is saying. I'd maybe make it a bit broader and say it's really a finance transformation super cycle, because obviously ERP is one part of it, but what's happened because of all that legacy ERP is still on-prem, you've seen a whole bunch of point solutions grow up around it, because people have been trying to say, well, fine, I'm going to do this, but I'm going to go put, cloud planning, or I'm going to go put some cloud procurement app, and they're going to put it all on top. And so you end up with this big spider web of applications that are just a mess, and you're trying to move data between them. And so just to echo what Chris was saying, there really hasn't been investment. I'd say the CFO's been a bit the cobbler's child on this one, because they've invested in Salesforce automation, they've invested in HR automation, they've been investing in IT automation, and they've kind of left the office of the CFO as behind. And we too in the CPM market, I mentioned we were Hyperion replacement. Most Hyperion is still on-prem as well. There's still in our research, there's still 15,000 companies that are still running Hyperion on-prem and take business objects and take which SAP bought, and some IBM, and so there's the same phenomenon that's going on more broadly around the office of the CFO. And just to kind of migrate to the second half, which is this is obviously titled AI. You can't leverage AI, and you can't really take advantage of a lot of the benefits that AI brings if you're using legacy disparate software. And so and that's what the research is telling us, that number one is in 2035, and you've seen this migration, which is CFOs need to become more strategic. More of my peers are coming from banking than from this. I happen to be a CPA, but than coming out of the accounting profession, because of the need to be more strategic. And they're really, the research is saying CEOs are asking CFOs to help them look around corners. The research actually, again, it's a bit of a forced ranking, but actually outlined and said that investors are willing to pay more for the role of the CFO than they are for the CEO. I don't believe that to be true, because I think they need to be a good team and good partnerships. But the CFO role is becoming that much more important, and investors are willing to pay for it. And the only way that you can do this is to have modern tools. And so I think those are some of the kind of high level findings that we had from Finance 2035. I see some people clapping. We have some CFOs on the call. I saw some claps on the chat. So
yeah, I think that especially for folks that are dialing into this more tech forward, so you'll find a lot of resonance, I'm sure, with that statement. And maybe on that note, so we talked a little bit about the technology. There's also one or two other questions in the chat we'll get to shortly, but I want to piggyback off something you said here with that partnership between a CEO and a CFO. And this is top of mind for a lot of our audience and customers here. Like, what is beyond, like, obviously having modern tools to help you do other work, what else is important in that relationship? And maybe we can start with you, Bill, with your most recent experience now. But for the weather forecasting of your CEO, I'm sure you have other things that you do trust him a lot with, and he trusts you with. So what does that successful relationship look like, and any tactical tips that you've kind of learned over the last couple of years?
Yeah, look, I mean, the CEO and the CFO need to be separated by nothing. They need to be so tight in their relationship. They need to be absolutely on the same page. Again, the CEO tends to be more the visionary in many cases, particularly in technology, the one who's, the technological visionary. And then the CFO, I mean, I saw somebody put in chat, needs to help them and the board make informed decisions. And again, not just give them the information. I think in the past, the CFO was they reported the news. Well, in this world, they need to anticipate the news, and this is really where AI and areas like demand forecasting and some of the modern tools around machine learning can really help a CFO kind of look around those corners and be even more helpful, and make the CEO successful, and obviously make the company more successful.
Maybe tying that back to sort of the experience that you guys had together on the road when you did the roadshow for OneStream, and also with you, Chris, training basically Bill on all these different questions. Any tips there from you, Chris, on like what is a powerful CEO-CFO combination on these roadshows? Like, what works well, basically, from a Morgan Stanley perspective, who's accompanied, or like your personal view, but like being at a firm and you having seen so many of these processes?
Yeah, it's a great question, and I completely agree with everything Bill has said. I think having that really tight relationship with the CEO and CFO really sets up for a really successful relationship overall. Also kind of piggybacking off of what Bill said, CEOs tend to have more of that visionary kind of outlook, and more positive outlook, and wanting to be really bullish all the time, which is great. But I think it's also the CFO's job to really kind of make it more realistic, especially for investors. When they're looking to garner confidence in investing in a company, you want to have that confidence in the CFO really having a, a good idea of really kind of what's going on near term, medium term, but then also kind of playing into that vision that the CEO is giving. There's tons of characteristics in really good CFOs that we think make them really special, like Bill here, one of the best in class in software. It's things like I was saying earlier, it's having that tight relationship with the CEO, but it's also like telling or being a good storyteller and telling a consistent message, right? When you're going into meetings with investors, you want to be able to craft a story that they can easily understand and follow with, and ultimately tell the same story, or at least generally same story to different types of investor groups, because obviously investors talk to each other and they exchange notes. And if you're telling one group something different than another group, that's going to look poorly on you and ultimately reduce the credibility you have with investors, which is really hard to regain once you lose that. And so having that kind of consistent message between both the CFO and CEO, I think is really important.
Yeah. Awesome.
If I could just add on to that for one sec. And Chris has probably seen this, many times, but the process of going public and how much time the CFO and the CEO spend together, doing testing the waters meetings, doing the road show. I can't tell, like I spent Father's Day with, in Baltimore at dinner with Tom rather than, with our family, because you just end up spending that, and we were I think we were doing testing the waters at that point, probably, right? That was June. But you spend so much time together that it really brings that, I think you just hit the peak of your tightness in your relationship as you're going through that process. And Chris, I'm sure you've seen that in many different companies, but it's a really special, it's a special time, I think, to really bring that relationship tight.
Awesome. I'm curious now on myself, as you're sort of going through that process. I know it a little bit of fundraising for a private company, obviously, not to be compared to public market fundraising, probably 10x more intense if you go speak to a lot of public investors. Keeping that narrative consistent is really important also when I go through sort of that journey. And I wondered, Bill, for you, just tactical tips and tricks, like, do you rehearse so many times? How do you actually do that well without then also sounding canned? That's sort of the opposite. If you're so good at something, it sounds like personality-less. So any tactical tips and tricks for CFOs out there, or listening, founders, CEOs, on how to best fundraise with a consistent story that feels authentic and good, basically?
Yeah, I'll start, and Chris, you can certainly pile onto this one. I absolutely think that you need to practice. I absolutely would say do not read a script. I think to your point, like, look, when you do an earnings call, you do a script because, you do your reported earnings, but, you should certainly, you can have slides. But I've seen people in my experience that, they memorize their words and then they don't come off as authentic. I would say the most important thing, I'm going to echo something Chris said earlier, but authenticity is so important in this process, in the fundraising process, in the earnings process, in the testing the waters, in the roadshow. People are going to invest in you if they think you're authentic. If they think you're full of crap, then they'll see through it. They've seen so many. They have pattern recognition like super fast, and Chris will see it, investors will see it, and that won't be a good outcome.
Yeah, now I'll piggy off of that real quick. I think that's completely spot on, Bill. I think being humble and really being candid with investors, especially when things don't go well, because it's not realistic to think that everything's always going to be perfect. And when you have those moments of of tough times, it's really important to highlight that for investors and how you're kind of working through that, because ultimately it's going to build just greater confidence from investors in what you're saying, especially with public market investors, which are naturally to Bill's point, very skeptical and have those pattern recognition traits. And so really having that confidence in investors is really crucial, and being candid and truthful and transparent is always super valued.
Cool. I'm going to bring the conversation back onto sort of from what is a very human topic that we just talked about the last 10 minutes of relationships and authenticity to AI and sort of the tech angle of it. So would love to maybe start with you, Bill, in terms of what you're seeing in the office of the CFO in terms of application of AI. Maybe let's start there before I ask a follow-up question.
Yeah, I'd say there's there's two parts of AI, right? There's quantitative AI and then there's generative AI. I think, on the quantitative side, the topic of machine learning has really been available in the market for call it 7 or 8 years. There was a lot of, there's a hype cycle, and lots of people kind of talking about the application for it. But it's really just been in the last several years that it's really been able to be applied. And so we've got a product that helps companies do better demand forecasting. Again, in multinational businesses, getting this right can be either you're not going to be able to get supply. If you don't do it right, you're not going to be able to get supply to your customers to be able to fulfill demand, or you're going to oversupply and you're going to have excess inventory. And so this is an area where, and again, we've seen double-digit improvement in customer demand forecasts, and so that's been a really good area. In the area of generative AI, and I run Microsoft Copilot on my machine. I think it's interesting. I haven't quite seen it really show up in terms of benefits. I do think, except for I would say a couple different areas. I think call centers have seen some really good benefits from generative AI. And I think developers have been more productive through the use of generative AI. I think in the finance function, it's not quite there yet. Like, I envision a world where I can turn to my team and say, look, I want to look at marketing spend against revenue by geography, by product for the last 5 years, and have that, happen. Because what happens today is they pull it down from 5 different systems and they put it on an Excel spreadsheet, and somebody's showing a heart. Being able to get that information faster. And what that's going to do is it's going to supercharge the finance team. It's going to allow, one of the reasons why there's a talent shortage in finance is because people they have lousy tools. They end up working until 2 or 3 in the morning, trying to take all this data and put it in an Excel spreadsheet. You should be able to get that data faster so that you can have young people who join your team that get to be, again, use the word supercharged. They can be more analytic. They can use their brains more, and that's what people want to do.
Yeah, absolutely. +1. I think you probably speak to everybody on this for everybody in this call. What about yourself, Chris? There's actually a question in the chat. What products or applications in the market right now are you most excited about?
Yeah, absolutely. It's a great question. I mean, to Bill's point, I think customer service, developers, even sales reps, I think those are kind of the early use cases that you're seeing, products getting announced and deployed. Salesforce, Agentforce has gotten a lot of attention in the industry. And so I think those are kind of the early places where you're seeing some of those use cases actually getting put into production, and companies are actually seeing like real tangible ROI from them. Mm-hmm. On the finance side, I think it's an interesting space because, to Bill's point, CFOs, finance teams, they've historically been a bit more conservative buyers and more risk averse. And I think that's maybe driving the adoption a bit slower within finance teams. But I'm quite constructive on AI applications within finance, because when you think about some of the key dynamics and issues at hand for finance teams, there's a ton of data. There's existing processes that are manual and error prone. The existing systems that you're using right now are pretty old. And there's a lack of new talent entering the space here. And so I think that's kind of one of the areas where you're going to see some more meaningful adoption. I just do think it's going to take a bit more time for actual kind of real budget dollars to flow there versus some of the earlier ones I mentioned.
100%. And also what we see, what's maybe interesting for the audience is it's a bit of a sliding scale of use cases as well. So use cases that within sort of the finance and accounting, or use cases that need a lot of human judgment anyways, or don't really have a right or wrong answer maybe at the outset, are a lot easier to start with than if you go down to like the accounting transaction coding layer where there is like clearly a black and white answer. And so sometimes doing mistakes in these type of black and white areas is actually more costly and take longer to then resolve basically afterwards. So it's also
somebody that thinks that AI is going to book journal entries, that's going to be a long way away. I'm not sure your auditors are going to be like, oh yeah, AI did this journal entry. I don't know. I think that maybe that'll happen, but it's gonna be ways out.
Yeah, not the best message. Cool. Yeah, no, great. So I think just keeping an eye on time here. So we have roughly 10 minutes or so left. I have one final question that I'd love to ask just both of you, and then we can also open it up for other broader questions from the audience as folks have them. The sort of most interesting question that I had for you, Bill, was around your experience as sort of now. So you were obviously private market CFO. You did IR, investor relations at Microsoft. Had your public experience there. Now that you're sort of in seat as the key person on the CFO finance team, what was most surprising in the last 5 to 6 months since you're listed that you would have not expected?
I'm going to say what people told me to expect, that I didn't believe them, which is people look at the stock price every day, and I found myself, especially, we just did a follow-on secondary last week, and so I've been looking at the stock price a bit more, just given that we floated 15 million more shares. But people look at the stock price, I would say, and there's a bunch of nuances around that, like, again, like who's an insider, who's not an insider. There's a lot of processes that, back to my comment on transparency, you want to be transparent with everybody. You want to be able to give people information, but then you end up making them all insiders. And we've been pretty constructive on having people. There's a concept, for those of you who don't know, there's a 10b5-1 plan concept that you can implement that people apply. So there's just been a lot of I'm not sure this is the answer this is the answer you wanted for my question, but there's just been a lot of internal processes that we've had to get right as you transition from a private company to a public one, where people can sell shares on the open market. We just exited and maybe it's a little bit pressure to me. We just ended our lockup period a week and a half ago, and so that's probably why it's so fresh in my mind. Is once the lockup expires, it's people go crazy.
Interesting. Awesome. And for you, Chris, what we touched upon a little bit with authenticity, but I'd be so curious, as you train CFOs like Bill and work with him through sort of that IPO prep, what are the, again, one or two most tactical things that maybe aspiring CFOs can get started today in terms of training and getting right to be once hopefully a public market CFO?
Yeah. I think certainly practice, like we were talking about earlier, like get those reps in early, practice talking to investors, have a general kind of idea and like key points you want to hit with your messaging, but obviously don't have a script that you're fully kind of reading from or have memorized. I think also just like putting yourself in the seat of an investor and trying to think how they think, which means focus on the metrics that investors are focused on and that you think they're going to focus on, as well as understanding kind of what are the key investor debates, topics, questions that you would have as an external party looking at the story for maybe the first time or your first couple times, and really being proactive and trying to answer a lot of those questions ahead of time when you're speaking to someone the first time. And so those are kind of like the main things. Obviously, like we talked about earlier, being a good, consistent storyteller, being humble and really transparent with investors, I'd say, definitely part of the the key characteristics we look for really good best-in-class CFOs.
Awesome. Thank you for sharing. Yeah, I'll go into some of the questions from the audience here. I'll start with one that's directed at you, Chris, and quite unpacking that 60% share of on-prem ERPs. So there was a question around which industries are part of that. Is there any concentrations around industries for these 60% that are still on-prem?
We'll start with banking, Chris.
Yeah, for sure. There's
start with Morgan Stanley.
Yeah, I'd say definitely the kind of older industries that have been around for a while, right? Like financial services, manufacturing, automotive, a lot of these industries that, first adopted the earlier versions of ERPs and finance tools like 10, 20 years ago. There's plenty of organizations that we speak with when I do my research that are still running their ERP system on mainframes. It's pretty crazy that that's still happening, but it is. And I think those are definitely kind of the areas where you're going to see more of the cloud adoption on a go-forward basis. Obviously, the more kind of tech focused, newer companies have been the ones that have been, those cloud adopters right away, or, be more front footed in terms of migrating from on-prem to the cloud.
Yeah, cool. Awesome. Thank you. And then there was a question that was kind of upvoted here in the chat from George for both of you, actually, Bill and Chris, about the trade-offs between sort of consolidating a tech stack into fewer tools versus sort of that best of breed approach, and obviously the continuous tension between the two. Where do you fall on that spectrum, and how do you see that unfold from here?
Who do you want to go first? I'll start.
Go, Bill. Go, Bill.
I do think, again, if you look at what's happened in other functional areas, like the office of the CRO, you've seen a lot more consolidation around Salesforce. In the CHRO, you've seen consolidation around, some of the big vendors, whether it's Workday or it's been UKG, and you've seen kind of more consolidation. Certainly, you go into the office of the CIO, and ServiceNow's been, a powerhouse in terms of consolidating processes. And so I do think in the office of the CFO that you're going to see more. We obviously hope to be a consolidator for the office of the CFO, but I think you're going to see the same dynamic, and I think you're going to see the same dynamic play out. And it's been slower for all the reasons why Chris talked about, which was because the CFO hasn't been as forward with moving things to the cloud historically as some of those other functions.
Yeah, just to add on to that, I think, historically, especially in the enterprise market, it's been much more of a best of breed type of market, right? Enterprises are more complex. They want more customized solutions. And so leveraging more of those best of breed vendors has allowed them to get that kind of, greater specialization in their business. But we've certainly seen that trend of consolidation over the past year, 2 years, primarily as a way to reduce your expenses and just limit the amount of software vendors you're really working with here overall. But I think the enterprise market, you're going to see that consolidation. You have been seeing it, and as a result, vendors have responded and they've built out additional functionality, whether that's organic product innovation or M&A to get those additional functions to be that kind of broader platform. And obviously that's worked really well for some of these platform vendors like a OneStream, like a Workday, who offer a broader set of functionalities that people can further consolidate spend with. But I do think there's going to be still some areas for best of breed vendors to play in. As part of that ERP supercycle note, our survey found that there are areas such as like planning, supply chain, procurement as kind of key areas within the office of the CFO that enterprises still prefer to use more best of breed vendors. So there's going to be a combination, probably more consolidation than in the past, but still room for both, I think.
Awesome. And I think that's a great place to wrap. I know both of you guys have hard stops in 3 minutes, so I will give you a breather of 90 seconds or so. Thank you everybody for dialing in to come join us with Bill here from OneStream, Chris from Morgan Stanley, and us here, the team at Rillet. It was great to have all of you. And if you have any follow-up questions, feel free to reach out and we can continue the discussion.
Awesome.
Cool. Awesome.
Thanks, Nick, for having us.
Thank you guys. Thanks for coming on.
Thanks, everyone.